Oliver, what are the cons to using a home equity line of credit? There's not very many, but the cons to using a home equity line of credit is you are not in control of how much credit is available to you. The bank is. And the bank has the ability to reduce how much credit they are lending or how much credit they're making available to you at any time. Now, maybe your contract stipulates that they have to give you some type of advance notice. I'm pretty sure mine didn't. So something to look into is if there's any advance notice. There typically isn't. Usually you'll just hear from them that, hey, your credit line's been reduced. So that's a risk, because when would that happen? That might happen during a recession. What else might happen during a recession? You might lose your job and you might need access to more money, in which case you might look to your home equity line of credit and find that it's not available. So one of the things that I try and teach people or have you be aware of is if you're relying on a line of credit in order to do dynamic banking, in order to do paycheck parking, in order to help serve as part of your emergency fund, in order to transfer money back and forth from your life insurance policies more efficiently, if you're relying on that, then if we get into a tight credit environment, you need to be in contact with your bank or your credit union, whoever's offering and extending that line of credit, and find out how they're doing. Talk to the loan officers and find out if they're denying any new people to sign up and get home equity lines of credit. The first thing that they're going to do is they're going to start denying new business. They're going to go after current credit lines next. That would be the order that I would expect. Some of them may flip that around, depends on how quickly they decide they need to tighten up. But stay in contact with those loan officers. They'll probably be able to tell you if lending restrictions are going to be put in place, or if they've started tightening up their lending standards. If that happens, then maybe you want to just pull out all the credit that you have available before it gets locked up. In which case, you'll be in control of that money. You're going to pay a little bit of extra interest, but you also get the peace of mind of having that money available when you need it. And it's not just going to disappear and not be available if you do end up needing it. And that can be worth a few $100 a month. That can be worth it to just sit on it. Or when you have it, you can either sit on it or you can deploy it somewhere. If you have an infinite banking policy, you could put it into there, knowing that you're going to be making some gains and offsetting potential interest charges that you might get from having it out. So good question. Good question. Let's see. There might be some other cons. That's really the main con. What else? What else might there be for a con for a HELOC? You have to apply for it and qualify. So that's kind of a big con. You have to have a house with equity in order to be able to qualify for it. But once you get it, there really isn't any cons outside of that. There is a limited amount of time that you have access to put money in and take it out. Typically 5 or 10 or 15 years. So that's something to be aware of as well. And the other times that you might see a reduction in credit available is if there's a real estate crash, if the real estate market crashes. So something to watch out for. This was a question asked and answered during one of our Wealth Care Wednesdays live streams. If you have any questions, leave them in the comments section below, or join us on one of our Wealth Care Wednesday live streams where you can ask the question and we'll answer it on the air live. I hope you found value in today's video. If you'd like to find out more about IUL and whole life, check out these videos right over here, and we'll see you next time. Now go maximize your cash flow.